Hey everyone, Shawn Brown here. I'm the founder and CEO of both California Lending Group and MortgageMaker. As we step into 2025, I want to talk about where I think the housing market and the mortgage market is heading. There is a lot going on right now, and I want to take a moment to go over the trends so that we make the most of this coming year. So let's start with interest rates. 2024 rates were all over the board, up and down. They were extremely volatile. And guess what? I don't think that volatility is going away in 2025, but I see it as an opportunity. Because we know the volatility is coming, the key is going to be to lock in those gains when we have those big dips to the downside. Timing is going to be everything in this market because a loan that makes sense today may not make sense tomorrow. So it's key to be watching our pipelines for our clients. And when a loan makes sense, reach out to them and get them going. And also being proactive and prepping them for what's coming. Get the loan started, get the file moving forward. That way, when the time comes and you can lock in those savings, you're ready. So here's the good news. We all believe that interest rates are going to be trending down in 2025 steadily, not as quickly as we had hoped, but we do believe that they will get close to 6% this year, hopefully just under 6 in the high 5% range. And that's a good thing. There are a ton of buyers out there in the market that own real estate with interest rates at 3 or 4%. And they're just waiting. They need to move for one reason or another. I talk with clients every day. They have kids. They've got a divorce, or they just need more space. They need to move because of a school district, and they feel stuck because their interest rates at 3 or 4%, and market interest rates have been 7 or 8%, and their housing payment would double if they moved. So they've been on the sidelines. They've been stuck in their home essentially. This is the year though that we've all been waiting for. This is the year where interest rates drop down to an affordable level and spurs that activity in the market and gets folks able to move between homes again. But here's something everybody needs to keep in mind. Housing prices aren't going down. In fact, we anticipate that they'll continue their steadily 5% a year or so appreciation. Now, not the 10 or 20% we saw during COVID days, but all signs are indicating that we will have steady appreciation growth in the years to come. And it may be accelerated with policies such as tariffs entering the market. The cost of building will increase, and that's going to create inflation in our housing market. So those types of policies we could see real estate hit another double here in the next 7 to 10 years, which is great if you own a home, but not so great if you're trying to time the market to get in. This is why real estate continues to be one of the best asset classes to own and is also an incredible hedge against inflation. You get to purchase a property with little amount of money as a down payment. You could buy $1 million home with as little as 5% down or 50,000. So you get to control a large asset with not a lot of money down, and that large asset price will continue to appreciate over time. So here's what I recommend. Don't wait for the perfect time to buy a house. It does not exist. Asset prices of real estate are going to continue appreciating. Yes, interest rates are on the higher side right now, but they will come down. So if the payment is affordable today and you can buy, you can lock in today's price and in the future refinance. And you might cut your mortgage payment in half in the future. But here's the thing. If you wait to buy real estate in the future when the price is 10, 20, 30% higher, and when interest rates come down, you're probably going to have to bid at a higher price, even after all of that appreciation, because everyone's going to be trying to take advantage of those lower rates. So you get the best of both. You get to lock in today's price and you get to refinance, lowering your monthly mortgage payment in the future. Another huge opportunity I see in the market is that we've lost a lot of loan officers. I just heard a stat that we lost another 25,000 from December to January. That's 25,000 loan officers that didn't renew into 2025. And we're taking that as an opportunity to go serve our community in an even bigger and better way. There is a major lack of leadership out in the industry, and the folks that are still out there are oftentimes order takers. And we're encouraging everybody to step up and serve their community in an even bigger way in 2025. This starts with helping your clients understand the bigger picture and showing them how real estate builds wealth and guiding them through the process from start to finish, not just originating the loan, but really rolling out the red carpet for them and helping them through the entire process feel comfortable and confident. This is how you build long-lasting relationships and trust in your community. Again, I am fired up and extremely optimistic about 2025. I think this is going to be a year to remember, and I'm so excited to be on this journey with you all. If you ever have any questions or you need anything, you know how to get a hold of me, and we'll see you soon. Take care. Bye.